Tesla investors, here's the bottom line up front. This week made one thing extremely clear. Tesla has entered the final preparation stage for real-world autonomy. FSD improvements, reliability upgrades, and aggressive pricing are all aligning toward a single destination. And if you're a long-term TSLA investor, understanding why these moves are happening right now could shape how you view the next decade of Tesla's growth. So why does this matter to you? Because this week's news isn't about isolated updates. It's about Tesla quietly positioning itself for a future where cars generate recurring revenue, where autonomy becomes a service, and where Tesla shifts from a car company to an AI mobility platform. By the end of this video, you'll see how each headline connects to the same long-term value engine. Let's start with the key facts from this week. Europe unexpectedly extended Tesla's official FSD ride-along program all the way to March 2026. In North America, FSD demonstrated remarkably stable driving on snowy roads. Version 14.2.1 introduced contextual texting permissions, allowing limited interaction when the system judges it safe. Meanwhile, Consumer Reports significantly upgraded Tesla's reliability rankings. And in Europe, Tesla released its most affordable Model 3 ever, priced in the upper €30,000 range. Finally, we saw Optimus jogging with a fluid, human-like gait, hinting at how far Tesla's robotics platform has come. These updates may look unrelated, but they form a single strategic picture. Let me break it down. First, the Europe FSD extension. This is far more meaningful than a simple program delay. Europe has the strictest regulatory environment in the world. So, the fact that thousands of people are lining up for official FSD demos and that regulators allowed this program to continue for another 2 years signals rising public acceptance. Tesla is building political and social momentum long before autonomy is formally legalized there. It's a slow, deliberate play, but one that could pay off massively in the long run. Second, the snow driving footage. Snow is one of the hardest environments for AI. Lane markings vanish, road texture changes, and signs often disappear. Yet FSD remained calm and stable, showing a level of situational awareness that goes well beyond classic lane-following algorithms. And this is crucial for markets like Canada, the northern US, and the Nordic countries. If autonomy can't handle winter, Robotaxi cannot scale. This footage suggests that Tesla has crossed an important threshold. Third, V14.2.1. Allowing texting in certain conditions sounds minor, but it implies something big. It shows the AI is beginning to understand context the way humans do, not just what the car is doing, but whether the situation is fundamentally safe. That's a major step toward level 4 style reasoning, and it pushes FSD closer to real-world autonomy rather than demo stage autonomy. Now, let's connect this with the strategic context behind Tesla's decisions. To launch a global autonomous network, Tesla needs 3 pillars: AI capability, reliability, and fleet size. This week, we saw progress in all 3. FSD capability improved, reliability rankings improved, and fleet size, that's where the low-priced Model 3 comes in. Many people see the new €37,000 Model 3 as a reaction to weakening European EV demand. But I believe Tesla has a deeper motive. Autonomy requires massive amounts of real-world data, and cheaper vehicles exponentially expand the learning base. Tesla isn't just selling a low-margin car, it's increasing the number of sensors feeding its AI. That shift from margin optimization to data optimization is exactly what you'd expect from a company preparing to monetize autonomy rather than hardware. So, what does this mean for investors? 3 major things. First, regulatory risk is quietly decreasing. Europe's extended FSD demos show that the region is warming up to autonomy more than many assume. Second, Tesla is pushing closer to a recurring revenue model. Robotaxi and autonomous services could one day generate more profit per vehicle than selling the vehicle itself. Third, Tesla's competitive advantage is widening. Waymo and Cruise have limited geofence deployments. Legacy automakers don't have unified AI architectures. No one else has millions of vehicles feeding a single real-time learning system. Tesla's feedback loop is unmatched, and this week strengthened that loop even further. Now, I want to share an unexpected insight that surprised even me this week. Many investors assume that Tesla's robotics efforts, especially Optimus, are still years away from commercial relevance. But the new footage of Optimus jogging changes that narrative. Smooth gait, natural arm swing, controlled balance. These are not minor upgrades. They reflect improvements in Tesla's shared AI infrastructure. The same neural networks that help FSD understand human movement are helping Optimus understand its own. Tesla isn't building a robot and a self-driving car separately. It's building one unified AI platform with two physical expressions. That is a far more scalable business model than people realize. Looking ahead, here's what I expect over the next year or two. Europe will gradually move closer to approving more advanced autonomy features as public exposure increases. Winter performance will continue to improve, opening up high-latitude markets. Fleet expansion from affordable models will accelerate the training loop. And Optimus will start demonstrating practical tasks, not just motion. All of this pushes Tesla toward an AI mobility and robotics company, not a traditional automaker. So, here's my final takeaway as a long-term investor myself. Tesla is entering a transition phase where hardware sales become the foundation, not the product. The real product is the autonomous network, the robotics platform, and the AI that connects them. Each improvement in FSD, each bump in reliability, and each new affordable model is part of that transition. This week didn't just move Tesla forward, it clarified the direction Tesla is heading. If this analysis helped you see the bigger picture behind the headlines, consider subscribing to the channel. I share this content for investors who want to understand Tesla's long-term strategy beneath the noise. And let me know in the comments, do you see this week as routine updates or as early signs of the Robotaxi era taking shape? Thanks for watching. I'll see you in the next one. Before we wrap up, let me take a moment to introduce myself. I drive a Tesla Model Y, and at home, I've installed a Tesla Powerwall, so I actually charge my car with solar energy. I truly believe Tesla is shaping the future, and that's why I share the latest news and insights here on this channel. I'm from Japan, but I want to connect with Tesla fans all around the world. That's why I also create an English version of my videos. YouTube now lets you switch the audio into your own language, so you can enjoy it in whatever language you prefer. Most of all, I'd love to connect with Tesla fans everywhere so we can support Tesla together. I also share updates on X, so feel free to follow me there and let's connect. And if you haven't already, please subscribe to this channel. I'd really appreciate it. Thanks for watching, and I'll see you in the next video.